Hello, guys. Hope you have a good afternoon. We will definitely have a good week start, and the reason why we have a good week start because we are good. That's the only reason, and that's a pretty good reason. So let's go through on this week and what's going to happen. But first of all, you might really wondering. Well, if you do, and if you did not follow the last at least two live streams, then you might wondering why the stock market is going up, why the stock market seems to be strong, etc., etc. But in reality, in the last two live streams, I think at least the last two live streams, I was preparing to you and I was warning you that there is an opportunity for an upside movement, for a bounce back, for a correction, and we need to focusing on not on the correction itself to the upside, but rather when things are turning back to the normal way, which is bearish, then we can focusing on things. Um, we had a couple of possible reasons why the stock market could go up and why this thing is happening actually, but it wasn't technically 100% clear. The only reason what we figured out in the last live stream is that there is no major power in the buying, and therefore probably the first idea that the big fish is about to testing the buy the dip community, it like seems to be the most accurate reason why the stock market could go up. Now that's coming actually true, and there are more signs. What we got in the last couple of days and the last week, especially the last 2 days of the last week, and I would like to share with you a couple of information about that. So technically, the stock market is basically going up because of the bond yields, and the bond yields are down. Now that might be a new information for you, but this is actually true, and the reason why the bond yields are down is because actually the US bonds went up a little bit last week. In fact, they broke out of the zone, and now we are waiting for the results because the breakthrough is not confirmed just yet. I'm going to show you a couple of charts about that. And we are really wondering and just looking for the charts with very much interest, whether it's going to be successful or not. As we know already, there are really big investors that they are actually started to buy the bond market. In general, just because investors are buying bond markets, this can help something on the bond market, but it's not good enough to maintain a bull trend. In order to maintain a bull trend, we're going to need the Fed, and also we're going to need a couple of more facts, such as the Japanese supposed to buying bonds as well. Now, on the other hand, China is not helping for the US bond market because, as you know, they are reducing capped US, especially debt-based bonds. So this is a little bit of a counter effect of the investors buying. But still, the bond market is a little bit managed to go up. Now, the reason why the bond market is going up because the stock market does not pay anymore very well. It is still a very good playground for the traders, but the stock market is not a good playground for investors. Not to buying because they don't really buy for 2 years now, but rather the traders are just hanging around and sometimes trying to ride a couple of waves to the upside and to the downside, but they don't even want to, I mean, the investors, they don't even want to hold the investment. And I have a very important news about that Berkshire Hathaway is finally started to dump stocks. That's a big thing. So why I do not see this on the chart? Because, I try to emphasize the 100 million times, and I do not have a problem to emphasize again and again and again that when you see investors making some activity, or when you hear about that investors are making some activities in terms of stock, the first time you're not going to see the results, because obviously the trader community is counterbalancing this. When the trader community is starting to react on the direction of the investors thinking way of thinking, then this is the moment when you see them on the charts. And this is especially true when charts are going up and investors starting to buy some of the assets, any kind of assets on the market. And you don't see that particularly on the charts, but at first time at least. But you experience the bull trend only when the traders are joining the game and they start to buy again as well. Now, we will not be able to identify how much investors are out of the stock market at the moment and how much is planning to get out. We have a fairly good idea that there is a lot of them wants to get out or already got out of the stock market. So this is one reason, one proof of my idea, what I emphasized last week, that I think what is going to happen is that the big fish is going to start selling and selling, but in waves. And when they start, when they finish with one wave, they're gonna wait a little bit in order to test the buy the dip community, which is not the brightest side of the trading community, but still, because the Wall Street is big fish as well, but not as investor, but rather as a trader. And the Wall Street is moving to the direction of the investors for the long term. And on the short term, they are able to support the, as I said, not the brightest part of the trading community, just in order to create some kind of, fake rally or some kind of fake signal. So make them more buying stocks or whatever they're buying at the moment. And then they're starting to dump the actual asset on the market. That's what I assumed last week, and it's going to happen. And this is actually happening. So because we get the news one by one that the largest investors on earth, they started to sell everything. This is a very good confirmation that if we see something going to the upside, especially on the stock market, this is a pure pure testing of the buy the dip community. Now, how do I know that the big fish is not buying right now? I have a very, very simple answer, and if you want, we can have a look on the charts. But by the way, nobody suggested any charts. There was only one person, and I'm gonna have a look at those charts, what he suggested. It looks like there is only one person that is trading, and the rest of them is not trading. So if you want to suggest any chart for the live stream, I'm waiting for your comment in the live chat room. You know that we have live streams every Monday and Thursday. So if you give me those suggestions one day before the start of the live stream, I will be able to check those charts out and just posting or reporting about them. Just use this opportunity, because if you don't use this opportunity, I'm going to cancel this opportunity again, because it doesn't make sense to, just keep it up with services what nobody uses. So technically, what you see on the charts, especially on the gold charts, I explained that to you 2 months ago and 1 month ago as well, because we were waiting for this moment, that the gold is a safe haven. And as a safe haven is reacting to a positive side whenever there is a panic in the stock market, there is an investor sell-off in the stock market, when the traders start to following the investors to the downside, and also maybe in some cases there are geopolitical reasons as well, suggesting some kind of panic or the possibility of the panic. And we got that, all of them at the same time. I mentioned to you that in terms of geopolitics, we are not in the worst case scenario. In fact, we just at the first phase of the Israel-Hamas war. We still did not experience the second phase, which is supposed to be that other major powers such as Iran or the United States, maybe Russia or China, is joining the game. That did not happen just yet, but obviously the United States is building up its army around Israel, so there's a high possibility. But it did not happen, so we cannot say that this is about to happen at the moment. And so, therefore, if the big fish is trying to save its money from the stock market, they obviously gonna go to safe haven assets, and the gold is the most reliable safe haven asset in the world. And what is very interesting that we saw in the last 5 to 6 days, mostly 5 days, that the stock market performed very positively. But in the last live stream, I told you that the volume is not so high in buying. So this is very interesting. And I think that the big fish is not buying the dip right now. But we just got another confirmation. I was waiting with this information because I needed the proof of that. But the gold did not decline with the stock market rising, which means that big fishes, investors and traders as well, they do not buy the dip. They do stick to gold because they know exactly what is about to happen. And what they're doing is they're waiting for the buy the dip community to have enough highs on the stock market. And then at the sudden moment, they're going to start shorting as well. So as of now, we don't experience any kind of sell-offs or major decline on the gold market. So this means definitely the big fish is waiting for the opportunity to shorting the stock market, and they do not participating in the buy the dip process as it was expected 100%. So just as I said last week, it is a test of the buy the dip stupid community. And this is why there is no major volume in the price increase what you experience in the SPY and the Nasdaq, etc., etc. So that's just I just wanted to tell you a couple of sentences at the beginning about that. So you're supposed to 100% understand why the stock market is going up. I was warning to you about that possibility. It did happen, and now we are waiting for the reaction of the big fishes. Most probably their direction is still to the downside, so still bearish. So this is why I did not recommend to start buying the dip with everybody else, but rather waiting for the opportunity to the downside, because when the chart is start to go to the downside, it will be way bigger than any kind of movement to the upside what we're experiencing right now. So just keep that in mind and focus on that in your trading, then you will be fine. So now, in terms of macro data, I will not making a very long update on that. There is two reasons. One reason is because we have a couple of charts we need to take a look, and we need time to do that. And the second reason is there is no major changes in terms of the macroeconomics effect. And if you're wondering what is going to happen this week, then you just go to the website and check out the Prezi document, which is available for the pro members with all the explanations. And also, if you want that, you can do that on the advanced level, which is Hungarian, so it's easier to read. So there is, as I said in the analysis, over the weekend, there is no major US macro data this week, and except one, which is Jeremy Powell's speech. If I remember good, that will be on maybe Wednesday. But therefore the market is focusing on other things. So I mean the US market. So there is no major focus or no major reaction for the macroeconomic data, for the US macroeconomic data. Of course, there will be for the UK, European, and any other Chinese or whatever we are following. There will be reactions, aggressive reactions on that, but not for the US. And therefore, the market is focusing on completely other things. Now, the market is focusing on, firstly, geopolitics. You may be wondering why the market is not reacting so negatively for the Israel-Hamas war, and that I told you why, And that's the reason why, because we are at the first phase of the war, and everybody is watching now whether we will enter to the second phase or not. Now, you will know when we are entering the second phase, because when we do that, that means other nations, as I mentioned, mostly major nations with major army capabilities, are joining to the game. Now, as long as we don't experience this, we will stay within the first stage of the war, and it could be contained within this stage. I don't know. I really hope, because that means less people are gonna die. But if you're waiting for a very negative reaction on the market, that could be not only the stock market, that could be the crypto market, the stock market, the forex market, or whatever market you're following. So this could happen only when we experience that other nations are showing up and joining in the military process, or just sending a very, very strong signal that they are aiming to join and will join. So these are the signals what we need to watch. Once we get this, you will be able to expect some kind of negative movement on the market. Now, the other field about what the market is watching, because we are lack of US data, macro data this week, is the market news, and that's because the only reason to get updated about the geopolitical events, about the corporate earnings, about anything, is going through the market news. And so they are watching the market news right now. And so if the market news are suggesting something very tragic, you can suddenly expect some negative movement on the market, especially on the stock market, by the way. And why do I say that? The reason why I say that, because the stock market is driven by the retail traders at the moment, because, as I said, the big fish is not reacting just yet. So yeah, the first reaction gonna come from, or could come from, the retail traders if they scared about any kind of geopolitical event. Or it could come from the investors or the big trader fishes, such as the Wall Street. That's because they just pushed the red button and started to short, because they have enough of the stupid buy the dip stupidity. So and the third main sector, what the market is watching right now, is the bond market. And I'm going to show you the bond market today, because I need you to understand why it is very important at the moment. So yeah, that's actually the three major sectors that the market is watching right now. And what we need to check out is, first of all, the market sentiment, because there is no major changes in the market news just yet. No major changes within the corporate earnings just yet. What I showed you last week, there's no changes at all. There are no changes in the geopolitical field, but you know exactly by now that the market is waiting for the information. We don't know whether the information is going to come or not, but the market is waiting. It's ready to react, but they just don't know what to react for at this stage. And so therefore, we need to get them together and see how the news outlets are trying to direct the narratives, and they don't have so much chance. There are less chance for lying right now, and therefore they need to react about the market news about what is going to happen, or what is going to what they know about either the macroeconomics, such as last week was very important with the Fed decision, rate decision, and the non-farm payroll data, which was terrible, by the way, and obviously geopolitics and corporate earnings as well. So we need to check out the market sentiment and see how the market is anticipating those informations. And as we see the ETFs, the index market, and the stock market, as we see, there is no major improvement in the finance sector, just a little bit. And if you go to the charts, for the finance charts, and have a look of them, you see that the bounce backs are really weak. Most of the times they are not even including any structural changes. So the market is reacting on a very weak way to the upside in the finance sector, while the health sector is a little bit more stronger than the finance sector, which is not a surprise because the health sector is also some kind of safe haven in such a in some of the scenarios. The tech sector is also reacting positively, but as you can see, this positivity is not very strong at the moment. And also the retail is not so strong, but it's still improving somehow. So we got the first four major sectors are improving somewhat. The health sector is the strongest in terms of improvement. But then when we go to the next one, we see a very much alignment between the consumer services, car industry, the transport industry, and the energy sector, because all of them improving a little bit with almost the same rate, if we can say that way. And since we know that the big fish at the moment is out of the game and only the retail and the buy the dip community is driving the market, then this is the real picture, how much power they have. And they do not have power. That's the funny thing, is that they just don't. Because even the consumer services, the car industry and the transportation is improving somewhat. They are still in extremely negative territory in terms of the sentiment. And that's the reason why, because retail traders just don't have the power right now. All the major player is looking to the downside. And that's what you could make a mistake if you believe about movements to the upside, that, oh my God, this is the end of the bear trend. It wasn't a real bear trend, and now we're going to go to a bullish scenario. Well, we do not. And we do not go to a bullish scenario right now. You just don't see that. Energy sector, however, is declining a little bit. And that's because there is no major news about the extent or possible extent of the Israel-Hamas war. And if there is no major escalation in this topic, the oil prices could actually go back, which we're going to take a look on the oil chart quickly today. So as you can see, in the majority of the sentiment is improving. There's only one sector is not improving at the moment, but this is a powerless improvement. So we need to be whoever trying to buy anything on the market needs to be very, very careful. In terms of the commodity market, there's a big improvement in terms of the essential foods. This is the sentiment of the market. The non-essential foods are improving just a little bit, but it's still at the same direction as the essential foods, and that is sending us a signal that the inflation is still here, and in fact, it could still rising in December, which would be very important, or even in November as well. We need to see that with the new data, but this suggests further inflation rising in the next 1 and 2 months, maybe. The energy sector is declining just a little bit. I'm going to explain that on the chart. While the precious metals are somewhat declining, but this is what I explained to you, that there is no major sell-off, there's no major correction in terms of on the gold of the or the silver chart, which means that the big fish started to play with gold and silver, and they do not want to let it go. So they stick to it. They don't want to play buy the dip game on the stock market. Rather, they keeping the gold, and they don't get away with that. So this is one of the most major signal that we are more likely going to continue to the downside on the stock market. Industrial metals a little bit improving further, and they are getting stronger and stronger. I don't think that this is the beginning of a biggest bull trend on Earth. I think there will be the biggest bull trend on Earth in terms of industrial metals, but I still expect some kind of decline, even though if we don't do a new low below after that. But that's a very good improvement. And the livestock is also declining a little bit. Now it's getting to stick to negative territory in terms of the sentiment. So this will be very interesting to playing around. Or just to see how it's playing out at the front of our eyes. So so a little decline and there. So if somebody is interested in the commodity sectors, I would just highlight that food industry is definitely improving. Industrial metals are somewhat improved, but don't forget that you need to have a look on the technical charts as well. Otherwise, you're going to make a mistake. And the precious metals are not declining majorly, so we still could have some very positive sentiment on the market, which is more opportunities to the upside, maybe. If we go to the forex market, you saw that on Friday the DXYs reacted very negatively for the macro data. It's not a surprise. I told you that the macro what we received on Thursday and Friday, it was terrible actually in terms from the economic viewpoint, and therefore obviously that doesn't help too much to the DXY. Now there is no major drop. I mean, yes, within one candle, but if you see the structures, how the DXY is moving to the upside, I mean, for the long term, there is no major disruptions just yet. But we need to keep an eye on that definitely, whether this decline is going to be a little bit longer term or not. But I'm going to show you the charts of the forex charts, so you will see that clearly what to expect. But without seeing the charts, now we're talking about sentiment, and we are talking about the bank sentiment on the forex market. And as you can see, the EXY is performing pretty well. The JXY is also, the BXY is immediately used the opportunity coming from the DXY, while the ZXY is also using it. CXY is very positive, but here is the surprise: the SXY. So in the last couple of weeks, not even couple, in the last few weeks, I mean maybe 2 months, I continuously told you that the Swiss franc is maybe looking like performing better than other currencies against the XY. And now we are seeing more signs that this could be a very good, I'm really afraid to say that safe haven, because it's not improving overall. I mean, if you see the long-term chart of the SXY, which is a Swiss franc, there is no major improvement for long-term, but in short-term, it's keeping its price within a range and playing around. So whenever the DXY is declining a little bit, the SXY is trying to get a really strong strengthening, and when the DXY is strengthening, then the SXY is trying to limiting the downside movement. This is an exactly opposite reaction what we see from the EXY, for example, because when the euro is moving, so I mean when the DXY is moving to the downside, the euro is not able to move very strongly or as strongly as the Swiss franc to the upside, while when the DXY is going to the upside, the EXY is definitely crashing. So there's a big difference between the euro and the Swiss franc. And also the AXY, the Australian dollar, is improving. But again, I'm going to show you the technical charts and you will understand that much quickly what is going on those forex items. But the sentiment, the bank sentiment, is pretty much positive at the moment. But as I said, the XY is the major one. So yeah, not a surprise after a DXY decline. And the crypto market is further improving, but the improving is slowing down. Obviously, there's not much space to the positivity, but it's also slowing down. So it's still positive, but we need to keep an eye on that. The Bitcoin was the first, and then the total market started to show that it wants to increase and breaking the zone, and then now the altcoins, what we tried to warn you even last week, maybe the week before as well, that this could happen actually, that some of the altcoins are actually strengthening, but the total market cap is not moving to the upside aggressively. The reason why we experienced that on the crypto market, because most of the payments went first into Bitcoin, and so therefore the Bitcoin price started to rise. When traders started to see this, there was more deposit into the crypto market. So the total market cap experienced a money inflow to the crypto market. That was the reason why the zone got crashed to the upside. And now this money, which was mainly in stable coins, they're spreading out in altcoins. So this is the reason why we are seeing an altcoin increasement right now. Now, whether this is an altcoin season or not, I think we could call that an altcoin season, but I do not expect necessarily that Bitcoin will go down very deeply. We got a couple of opportunities and possibilities on the charts, which if you want, we can make an analysis about that. But mainly, I mean, while Bitcoin can go making a corrective wave to the downside, as long as the zone is not breaking to the downside. I mean, you remember for the live chart that big red zone. So we're gonna stay positive, and then the positive movement, so the upside movement will be more possible. And as I mentioned, this would be somewhat natural from the Bitcoin, because when we are breaking such an important zone, than this red zone on the Bitcoin chart, a retest is expected, and if the Bitcoin would make a downward movement, this could be a retest, while the altcoins actually can improve even further. So that's why we're improving the sentiment, but it's slowing down because the money inflow is slowing down also. So this is the sentiment of the market. Overall positive, by the way. So we're supposed to see improvements in points, which we're going to see in a minute. But before we do, I would like to show you a couple of technical main charts. So what we see in the options market, as you can see, the VIX is going down a little bit. But the VIX at this point is oversold in terms of the VIX charts. And if we take a look on the SPY, now it really depends on today's movement, and especially Tuesday's movement. But the chart is keep building to the downside, so therefore we are still within this structure. It seems like we can call that as a bullish flag, which is not a problem. That would be true. But the real thing is that even if we go higher to the current higher high, the stock market is still going to improve with the retail traders and not the big fish. So the big fish was answering here, and that was only the first answer in 3 waves. So we're still waiting for the reaction of them. While I still see in the background the put contracts, the buying of the put contracts are developing. Today's the SPY put contracts are going to the upside again. So there is no decline in terms of willing to short the market, but they're probably waiting for the right time. When they see any kind of weakness from the buy the dip community, then I think that will be the time when they will start to react. But there will be signs as well, which I'm going to show you a little bit later. If we go to the stock market balance, because that was the options market balance, so as we see, the put contracts are still going up on the SPY. On the SPX is declining, but the SPY is stronger in put contracts at the moment. And if we see the balance, as you can see, we have a new low, which is looking like it's not accelerating to the downside, but it's keeping the momentum to the downside. It's pretty healthy. We are above the scale EMAs, but the scale EMAs did not cross each other just yet. The only thing happened that the 8th EMA crossed the 13th EMA, which doesn't mean anything at this point, at this stage. It only means that the very the very retail traders, and now I mean everybody who thinks that, oh my god, this is the next bull trend to the moon, they are buying. That's what the scale EMA is experiencing. That's why it's able to break the 13th. But as long as the 13th is still underneath the 21, technically nothing happened. So the major mood on the market is still to the downside. That's pretty interesting from here. There is some increasement on the buying volume, but it's still not reaching the level of the selling volume. So nothing to talk here. The volume is still way lower, and the RSI is getting closer and closer to the line on the upside, which is supposed to be the upper channel of the RSI. Now, if we get that reached and the RSI is turning back to the downside, this would mean that the MACD will not be able to cross the 0 line, and there is a high possibility for that. So in any kind of momentum going to go to the downside, it will be stronger. Now, when the RSI could start turning to the downside, I think the first chance to see that the RSI is turning to the downside on the stock market mostly on the SPY, is that when the stock MTM crosses this line with the green, with the blue moving average, and then this is the moment when the market will start to prepare to shorting at some waves, and that we need to see the power of the shorting, obviously, because I don't know how it's going to turn out, but that will be the first chance of that. This could take weeks if there is no sudden movement and there is no sudden negative reaction for any kind of mentioned reason, which is, as I said, there's 3 possible reasons. One is geopolitics, the second one is market news, and the third one is the bond market. If there is no major news about those, then the stock MTM is supposed to be able to climb all the way up here to this line and then start to prepare, as it did at this time. You see that this time what happened, it started to prepare at this time, and when it turned down, that was the time where we got the last wave, so far the last wave, as it was the strongest one also. So keep an eye on that. But also I would like to show you another chart. I don't usually showing this because it's just for my own, but let me explain quickly. The pink line is representing the wicks. The purple line is representing the SPY. The blue line is the US 10-year yield, and the green line is the DXY. Now, as I told you, the reason why the stock market is going to the upside right now is mainly because the bond market started to go up. So that means the big fish is not focusing on stocks. The big fish doesn't give a shit about stocks right now. The big fish is focusing on gold and the bond market. And so we need to measuring this. Obviously, we can measuring gold as just seeing the chart of the gold, but measuring the bond market is a little bit more difficult. And I usually, when we have a correlation between the market mood and the bond market, and now we definitely have, then I need to measure what the power is that it's coming through the bond market, so away from the stock market and into the bond market. So as you can see, the WIX is declining, but that doesn't mean anything. That means only that the volume of the put contracts buying is declining, and that's a completely understandable thing because as I showed you, while the SPY put contracts are increasing to the upside, the SPX put contracts are a little bit declining right now. So this is counterbalancing each other, and this is the reason why the WIX is able to go to the downside. While we see a little rally on the stock market, which is still building to the downside because there is no new higher high, by the way. So we are going to the upside a little bit, and here's the interesting part. The reason why that happens because either the DXY and the 10-year yield is managing to go to the downside. So I do not know how it's going to turn out with the 10-year yield and the 2-year yield. I'm going to show you on the chart, but you might remember when I explained that there is a limit, or not the limit, there is a target for both the 2-year yields and the 10-year yields as well. We reached the target with both, and now we have a rejection from that target. And we need to see whether the price is, not the price, but the percentage of those yields are actually able to retry to break these targets, or maybe just getting a rejection forever and for all. I don't know the answer for that, but retargeting is a highly possible scenario because the inflation is still very high. So therefore, those yields, those bond yields are not really able to decline too much. I mean, they are able to making a corrective wave to the downside, but as long as the CPI is increasing, there is more chance that the actual bond yields are going to go to the upside. Maybe not doing it for a new higher high, maybe just trying to stick up. I'm going to show you on the charts, but they are still able to sticking up, and therefore the DXY is also declining because the DXY is reacting to the bond yields. And while the bond market is seriously, just very slightly increasing, there's no major movement just yet, but there are a couple of signals about that. And so this shows a perfect correlation about how the market, how the money is coming out of the stock market and then going to the bond market. It's a very clear signal, and that's just a proof that only the retail traders pushing up the stock market right now, and I suggest it's going to be a very bad end of this if somebody not exiting the positions in time. That's very important. So this is the stock market right now. As you can see, this is a very unstable situation from the fundamental perspective. Sorry, I made a mistake, because that's the actual volume of the crypto, and here I put by accident I put the stock the forex market. Now I just want to quickly show you the forex market measurements right now. So as you can see, the DXY is turning into negative and maybe starting a retest process to a lower phase, and we will see whether it wants to stand up or not. There's one thing I would like to warn you about. If the DXY is going to for a retest for lower zones and lower supports, and if the retest is successful, and later on, maybe in December, the DXY will indeed rebound, that would mean the strong rebound, and we might be aiming for a new higher high, and that could cause a complete crash on other currencies as well. And why do I think that it's highly possible? And the reason why, because while the EXY is turning around the scale EMAs, it's trying to represent some strength. Don't forget that this happened in 3 waves. That was the first wave. That was very strong. Everybody believed that it's going to go forever, but that didn't happen. We got a very huge rejection. And then was a second wave, and then we got a huge rejection again. And now the third wave is a little bit, it's not very certain of its willing, and therefore I'm still waiting for a big rejection, but not as big as making a new lower low, but rather some kind of rejection and trying to make a retest to these levels on the EXY. And if you take a look on other charts, for example, the Japanese yen is bouncing off as well, but 69.01 is a major level. So as long as we are underneath, this is just a retest of a broken resistance, and make it support out of it. So that's a very similar situation what we see on the EXY, but the EXY is a little closer for that. If you see the British pound, now we still got the opportunities to forming some kind of bearish movement. So, but the fact that those scale EMAs almost completely crossed each other, there could be some more space to the upside. But we're gonna have a look on the BXY chart what that means. Now, currently, for traders who are trading on the forex market, the balance is positive on the BXY. It's rather neutral on the Japanese yen. It's positive on the EXY. It's negative on the DXY. It's very positive on the New Zealand dollar, which is surprising, but it started a consolidation therefore. Some kind of positivity on the Canadian dollar, but I just really afraid of that, because look at that, scale EMAs are still very healthy, showing bearish. So that could be a dangerous game. But here is the SXY. Now this movement from the SXY is a completely different story, because those structures, as you see here, they're extended structures compared to any other structures we saw here on the EXY. There's no structure technically to the upside from the Canadian dollar, neither from the New Zealand dollar, neither from the British pound, and by the way, neither from the Australian dollar. But there is a major structure movement on the SXY. And truly, we do not have a new higher high just yet, but we do have definitely a higher low. And if this turns out an upside building, this could be one of the most aggressive currency to the upside in positive ways, while the DXY is making a correction to the downside. And when the DXY is making maybe bouncing back to the upside, the Swiss franc might be able to survive with a very long time of consolidation, rather than going to the downside, whatever the other currencies are doing, technically all of them. And so the EXY, the Australian dollar, is fairly positive, true. It's breaking out from a structure which I'm going to show you on the chart, which we talked about it. So it's aiming for the next resistance, what we really need to have a look. But currently it has a positive momentum. And that's a very important information. And in terms of the crypto market, you need to start being very cautious, because I show you a couple of things. So we are still extending the power to the upside, but as you can see, the power is losing. This is a warning sign. Do we have chance to go to the upside? Yes, we do have, but even if we accelerating a little bit more, this will be probably the last wave to the upside, and then we do definitely have to make a correction and coming back all the way down, either to these levels or a little bit lower to the white middle lane. Now, if I want to explain that a little bit further, as you can see, while the power is declining, the average of the volume is declining as well, and the MACD is getting closer to a turnaround. The histogram is losing power as well. So it is a very dangerous situation right now in terms of the total market cap, and now we're talking about the money flow to the crypto market. And if I want to go further, we are losing the average power of the momentum, while, and that's the most important thing, the stock MTM is trying to cross each other. And I think there could be one more wave to the upside, but then we do have definitely a correction. And so as soon as the stock MTM black line is starting to cross this line to the downside, this will be the start of the correction. I do not talking about a large correction or a major correction. I don't think it's going to come down all the way down to 840 or 880 or even lower. I think this is a kind of retesting of the zone or something. So I at the moment I don't see why would we go back down underneath 1.12 trillion. So but we need to see that. Obviously, that's just my thought. And if you take a look on the total market cap technical charts, it would be obviously understandable, because we are still extending to the upside. As I mentioned, because of this stock MTM signal, we might have another wave to the upside, but I don't think it's going to be a large wave. So on a technical chart, there is a possibility that the total market cap is still making some kind of new higher high, and then making a correction, probably a late cycle close, and we will see how deep the correction will be. It could be a retest for 1.26, it could be a retest for even the 50 EMA after the golden cross. It would be completely understandable. So just keep in mind that is important in terms of the Bitcoin. So as long as the total market cap is above the major scale EMAs and the 50 EMA on the daily chart, I don't think that altcoins could damage. But as long as the total market cap is go underneath the 50 EMA, we could see some damage in the altcoins as well, maybe serious ones. So just keep your eyes on the market, and I think the altcoins are better opportunities right now rather than Bitcoin, but that's everybody's own strategy. This is my opinion about that. So that's the technical perspective of the market right now, and I would like to show you the points very quickly so we can turn to the chart. And when I started this live stream, that the good news that we are good is indeed. So how good the prediction of the overall point was, that when it started to increase from 26th of October to 30th of October, that was the first time I reported a higher number. As you can see, that was minus 78, and then I reported a minus 76. It suggested some kind of slowdown or even a complete halt at a resistance. And then we got the minus 72, definitely suggested or signaled further increase. And then today we got minus 69, which is still an increase, but that was just a prediction number. It showed that the overall market, how did the overall ETF market and index market reacted. So I hope now you start to see that this overall point is measuring the whole market. So whatever the market is anticipating, this overall point is anticipating as well. and it can actually indeed predict a little bit further. And I am 100% sure that it's not will be 100% exact at all times, but I did not see any mistake from this point so far. So this is a very good track. So it was signaling a possible bounce back, and the market is actually bouncing back. One thing to highlight, even the point with the 69, minus 69 now, it's not able to make a new higher high. The previous higher high was minus 55. And so as long as we're not going back above minus 55, we are still bearish. And it doesn't matter what the price of a particular ETF or index, it doesn't matter the price. What it matters is that the market, the overall market, the strength of the market is still bearish. It's still pointing to the downside. So that's what this overall point is showing us. There's no major changes. The market sentiment is improved as well. As you see, the macroeconomics are dropped. Shouldn't be a surprise, because the data what we received on Friday, that was just terrible in terms from the US economic perspective. That was terrible. But the interesting thing is, even though prices are going to the upside, and that's very interesting, the technical picture, which is at minus 13 again, because that was the same number. So after an increase, the technical point is actually consolidating. Now that's a danger signal that we could be very close to the end of these corrections to the upside. So just keep your eyes on the technical levels, because those are the things will indeed trigger some kind of correction to the downside. So keep your eyes on that. So what I can tell you is that the ETF market is still in bearish. This is in stable correction to the upside. The strength of the market is coming from the macro, the geopolitics, and the earnings. But the supplies could come from macro and the news. Now that's a new one, and the sentiment and the technicals. So just keep in mind the main risk in these charts, especially like we're talking about SPY, Nasdaq, US 30, Russell, so the largest ETFs mainly, is that they go to the upside and they could find some support and they just get in a rejection. And this could be the point when the Wall Street is just pushing the red button. So if you're stuck in buy positions, I do not recommend to buy anything, but if you're stuck in buy positions, you shouldn't do that, because you're warned that, that's not the best environment for buying anything right now. But yeah, everybody's own decision. So that's the ETF market point right now. It's still going to the upside, means still got opportunities to go to the upside a little bit, but the technical is signaling that there are problems ahead of us. And if you take a look on the stock market, let's do the fourth one for the second, because those are like brothers. As you can see, almost all points are developing on the same way. So here the technical is also consolidating, and the overall point is also technically is at 69, but that's a little slower. This is a little slower reaction than in the ETF market, which means individual larger stocks are in the most danger. And I'm talking about potentials in Google chart, Tesla chart, AMD, Apple, Netflix. So, the biggest, just to mention a couple of them, they are in the most danger, that they could just very suddenly turn it around and go to south. So the stock market is also stay within a negative range, a negative environment, and just improving in terms of the correction. And so if we go through the commodity markets, as you can see, there's no major developments just yet, but just one, or rather, I should say two, but the second one is not very important. So the one major improvement is the technicals. It changed from 7 to 8 points. That's a surprise, by the way, because there was a long consolidation on the commodity charts. but the news are also started to decline a little bit further. And as a reason why, because there is no new scary development in terms of the Israel-Hamas war. So the energy sector do not react positively. And therefore, the market news are declining because they did the reporting about that. And for some reason, news outlets do not report about the very obvious usage of gold as a safe haven. And I do not understand why they do not reporting. Probably they're trying to accelerate some positive narrative on the stock market, because maybe CNN was buying Tesla as well, or whatever, Nvidia, and they don't want to start selling as long as the Wall Street is not deciding to selling. So they decided to make some kind of positive narrative in the CNN. So therefore, every buyer the dip guy going to start buying the Nvidia, so the price could go up a little bit more, and then the Wall Street comes with the red button, and then everybody sucks because the CNN gonna get out, and everybody else who bought the dip for good, they're gonna stock in and losing their money. That's the story of trading on higher circles, if I should say. So this is why we see that the technicals are indeed accelerating on the commodities, because those improvements are really suggesting that the price of commodities are going through some hard levels and maybe increasing further. If you're wondering of commodity charts, you can leave me a comment on the Discord server so I can include in the next live stream. As you know, you got these opportunities, but if you don't use it, you're not going to get it. That's it. That's how it works. So if we go through the Forex market, as you can see, there is no major changes, but the sentiment is indeed jumped a lot. It was -8 point, and before that -10, and before that -12. That was the low. But now we are -4, so that's a big jump. That's the usage of opportunity against the DXY correction what we're experiencing currently. But I already told you all the warning signs, so there's no new information here. The most important thing is the overall point, because those so before the prices really started to increase in the Forex market, and I'm talking about the BXY, the EXY, the other currencies, this point started to rise from -56 to -52, and then we got a -45. So we got a perfect prediction from the point in advance that the stock market wants to indeed go a little bit higher, which shouldn't be a surprise. I'm going to show you on the index charts. Now we got a -39, so this shows further opportunities to go higher in other currencies, and maybe further decline in the DXY, but we need to take a look on the technical chart. So that's a pretty positive news in terms of the Forex market, but that's also dangerous, because don't forget, those movements to the upside are counter trend movements. So that means they are moving against the trend, the main trend. And so you're supposed to be a very experienced trader to be able to use those opportunities very safely. And in terms of the crypto market, I would like to announce in advance, I did not do, but I am planning to do a change and increasing the percentage of market news and events percentage. As you can see right now, the market news are driving the crypto market with 17% responsibility. I would like to increase this because I see very obvious analyses that this percentage it will indeed increase in the next couple of weeks. So I would like to change this percentage, which means that the market news will be more responsible for the movement on the crypto market. And that's a good sign for you, because the market news was the major driver on the crypto market overall. And if it will be the major driver again, then that's a good sign for a possible longer term movement to the upside, to say the least. But, and here is a big but, I said longer term movements to the upside, but I did not say very, very high. And I have a reason to do so, because don't forget, and here is the proof, the macroeconomic environment for the crypto market is still very negative. So the money supply is still very limited, and therefore it doesn't matter if the Bitcoin or whatever crypto asset is going to the upside for long term, but it seems like they will not be able to rise so much in terms of prices as long as the macroeconomic environment do not improve in terms of financials. So that means we could see a very tricky movement to the upside, which will or could include movements to the upside, but then a lot of corrections to the downside. That's just something, it's not a confirmation, it's not a prediction. This is what I can read so far out of the market. So yeah, we need to be very careful at that point. But the overall point of the crypto market is increasing from 24 to 29. And the reason why it's increasing is because the technical charts on the altcoins are actually improving, and therefore we got an improved point from 11 to 12. And overall, a market sentiment on the crypto market, which I don't think it's a surprise because I told you here, so you can get those understanding together. So the crypto sentiment is increased. This darker line is the last week. The brighter line is this week. As you can see, from last week, we increased a little bit. So we see this in points, actually, that we increased the crypto sentiment. As you can see, it was 16 points last week, and now we got a 17 points. And so therefore, the overall point was able to rise again from 24 to 29, which is actually a big rise. Well, yeah, in this term is a big rise compared to the last week's rise. And I think it's a very positive sign for the crypto market. But before you get too excited, let me just show you something on the crypto market, so we're not going to make a mistake about that. Let me just change the share chart on the recording, and let me change it for you as well here. So where is my crypto chart? Here is my crypto chart. Beautiful. So first of all, crypto volume. Since we identified that crypto market has a volume cycle, which is not a difficult thing, but nobody did, only the trade on the market. So, okay. But then we realized as well that from this data, so just watching the cycles of the volume, we could get so much information out of the market. And that information, what we received now, is that the market power is a little bit weakening. Now, why is that? Now, the reason why is that because we had a first to wave to the upside. So as you can see, those are the cycles, and it's not a secret. Those cycles are from weekend to weekend. So as you can see, the first wave was pretty good because the increasing wave did not disappear, did not dissolve itself into the correction phase, but rather kept up in a consolidation. We are talking about the volume now. And then the volume increased on the next week as well for a very new high. I mean, new high is like we did not see this level for a long term. And that was a very good news. But do you remember I just mentioned 2 minutes ago that the financial background of the crypto market is very weak? And that's because the money supply is decreasing, and it keeps decreasing, and probably will decrease even further once the big shit is hitting in, not on the market, but on people, about the high inflation and job losing and things like that. It's still ahead of us. So don't get very excited about the stock market, please. So, but anyway, this is we're talking about the crypto market now. So because the money supply is very limited, people are getting more and more limited to transfer money from their pocket, from fiat currency to crypto. I mean, they still can do it. I mean, you can do it as well. So there's no major thing. But if we reach a point when the inflation gets really hurting people, then this will suddenly disappear, and then they will not be able to, pay into the crypto market, but rather they're going to pay out of the crypto market because they're going to need the money. So for any kind of trading and savings going on the crypto market, it could come out very easily if the trouble is coming. So this is why I think it is understandable that last week the volume was actually way smaller than the second wave. Now, that doesn't mean we cannot go any higher with the volume, because it's obviously started on Sunday. You can see beautiful movement on Sunday in volume, which is a little bit unusual, because even last week was most of the strong asset down in terms of volume, and then the week after we experienced that Sunday dropping as well. Again, there was only 2 assets from this chart that they went up, and now, you know, almost all of them went to the upside. Just a few of them didn't manage to do that. So it's a positive signal. And if Monday, Tuesday, and Wednesday trading is going with a very strong volume, and then we can even hit the blue line. Now, what I am measuring, or what I am seeing right now, is not the highs, what the volume can reach, but the amount of volume can accelerate within 1 week. So that was the first week, and then we got a huge acceleration to the upside from the bottom, and now last week we got just a very tiny acceleration to the upside. So we might getting to run out payable money on a crypto market for the first wave, which is absolutely fine, because bull trends are usually not going like they just go to the upside. And you just can't say I am not right in this matter, because if we see the Bitcoin live chart, what happened in 2021, that's exactly what happened. That the bull market is started, and then whoops, consolidation, and then a second wave to the upside, and then correction, and the third wave to the upside, and then correction, then the fourth wave to the upside, and the fifth wave. There is always a correction. And when we go back to the volume, as you can, well, sorry, just to say that, so the high volume, as you can see, the volume is increasing here, and then there is one wave declining. So when you see the chart is making a correction, but the average volume is declining, this means that it's trying to suggest that you will have a correction and not a trend changing. This is what happened here as well. The volume was fairly stable to the upside, and then when we made a correction, the average volume was declining. So we had a correction, and then the second one, we got a declining volume again. And then the fourth and the fifth wave of the bullish wave, as you can see, there was a problem, because the majority of the volume average, the majority of the candles, the volume candles at this point when we went to the upside, was below the average. And that suggested that the steam of the bull trend is starting to get out. It's weakening. So there is a possible trend changing ahead. And when you saw the correction to the downside with increasing volume, now that was the moment when you said, that's it, finish, game is over. Now, many people did not believe. Obviously, I received the comments on YouTube as well when I said, you can go back and check that video, by the way, because it's still up on YouTube. So many people were saying that this stupid guy is saying that the Bitcoin will go down. Ha, 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 what a loser. Now, that happened go down because obviously if you see a pattern that you have corrections with declining volume, that means you have healthy corrections. But when you see that the volume is increasing while the chart starts going to the downside, that's the end game. That's the finish. That's the get out button. And obviously, traders who are clever traders and they're trading for long term, I mean, you know, that they are opening long term positions, they all know this. So now you know as well. Well, you're supposed to know already, but I just refreshed your memory a little bit about that signal. So what it has to do with the volume? It has to do with the volume that if you take a look at the volume, as I said, first wave, high and increasing volume. Second wave to the upside is steady volume. The third wave to the upside is it's increasing but below the average. And then the fourth wave is like not really. So that's what we are watching on the volume chart. So if this thing, what we are experiencing right now, wants to be a bull trend, because it's obviously, in terms of the Bitcoin, it is in the bull trend. So then we're supposed to see larger and larger waves to the upside, which means I'm not talking about just this little cycle, but do you see what happened here? So bull trend, let me come here. Yeah, that was the thing. That was the thing here. Yeah, that's what we are talking about. So do you see that? What's happened? So cycles going up and down, even declining when the chart is actually making the correction, and then another wave to the upside on the chart with the increasing volume, and then it starts to consolidate the volume and start to decline. So the volume start to make lower lows. That's the sign of a correction on the chart. And then the volume cycle starts to make higher highs and higher lows. This is not an exact building of the, let's say, price, because it's not really a price. This will be a little bit more uncertain than on the chart, but you understand the thinking of Wei about that. So this is what we need to look at this current situation. So if you want to see a bull trend, or we want to make, sorry, I need to go further here. So we want to see that this is actually now declining just a little bit. It doesn't make any new low below, but well, yeah, it's not supposed to make any new low below, but it's trying to keep the zone what we started to build here with this high. So somewhere between the green and the gray level. So if you see that the volume indicator is sticking between these two levels within the zone, that suggests some kind of healthy volume of a bull trend. If we're below this, so we're below the green line, it is not healthy. So even if we see a bull trend, it's not going to be healthy. So that's why it's very important to watch the cycles of the volume. Where is the cycle opening of the volume? And that now it's supposed to be here, which is a higher low, because we need to increase the volume on Monday, Tuesday, and Wednesday. So some increasement will be definitely. But if we don't make a higher high in average volume, that's a danger that maybe the next cycle closing will be a lower low. And that would suggest what? I'm going back to the crypto, to the Bitcoin chart, sorry. That's suggesting that Bitcoin might not be able to leave this zone for a while. And even if it's making a break-in attempt, that could be the danger, because on 29th of December, I think it's 29th of November, sorry, on 29th of November, there will be a cycle close. You see that? Okay, because that's okay. So we already broke the exponential movement to the upside, but only on the exponential side, because the RSI is still not broken. So as long as the RSI is keeping this yellow line, there's no major correction ahead. So this could help us to identify if that happens, what I just told you, that the volume is declining and trying to signal any kind of maybe weakness or correction to the downside, maybe deeper. This yellow line is supposed to break to the downside. Now, we can be lucky. And at this point, let me just call one more indicator to the Bitcoin chart. And that's the one. So as you see, the stock MTM is still very high and crossed each other already, started to move to the downside, while the MACD is also about to cross each other. But the RSI is still far away. So when is the danger? Now, we don't care about the MACD. This is obvious. This is a high point in terms of in terms of the momentum. Why? Because that was an exponential movement to the upside and we reached the high point. Can we make another leg? Yes, as long as the black line of the stock MTM, what you don't see here because it's actually white at the moment, but you see this black line here. That black line is becoming white as long as it's crossing the 40 level. This horizontal line, it's becoming white, and the upper side of the orange cloud is the black line. So it's crossed already. So we are already, in theory, in correction in terms of momentum. So the momentum is declining. So the power of the movement is declining. But as long as the black line does not cross the 40 line to the downside, and especially the yellow line does not cross the 40 line to the downside, that means we have a chance for another leg to the upside. But if both of those lines are crossing the 40 line down, we got a chance to make a correction. Now, this is what I told you in terms of the technicals. If we experience this, the MACD will come down, that's for sure. But that's not a problem. The problem, and it's not even a problem. The thing is that the question is how long we're going to go down. Because as long as this line is not breaking to the downside of the RSI, we are fine and we can still expect another wave to the upside. Okay? So as long as this is unchanged, even though we could have a small correction because the stock NTM is signaling something similar to us, there is no reason for panic on the Bitcoin. It's actually a good news because it doesn't matter that the Bitcoin is making a correction or consolidating in sideways. Why it doesn't matter? Because as long as we don't breaking this, that means there is no outflow, money outflow. If there is a correction, yeah, there is some money outflow. But if you take a look on the total market cap chart, as long as the total market cap price is above the scale EMAs, there is no major decline in terms of money inflow, which is very limited, as I told you, but it's still an inflow, some sort of inflow. Guess why this environment is very good for us? So the total market cap is slowly rising to the upside. It can even go sideways. That's absolutely fine. As long as above the EMAs, as long as the Bitcoin is making a sideways movement, altcoins is the one. They can make very good movement to the upside. So I was mentioning, for example, Aave, I think that was last week, that it could be very good for exercising until the zone. Now, we not only broke the zone, reached the zone, but we are about to break the zone to the upside, which could be a very good exercising point at this 112 again. So that was a very good call. ADA, it was a perfect call, but don't forget, and I need to warn you about ADA, that this is still the first structure to the upside since we broke the 200 EMA, which means 100% sure there will be a correction. And it could be a very deep correction. So when you try to use a situation like this, and it's just about to breaking the most important levels again. So when you try this, you need to be 100% aware that when the correction is coming, it will come hard. And it's getting closer because what the volume is doing, yes, it's declining on the daily chart, which means day by day, there is less and less and less buying power. Less and less and less people buying. That's not a joke. That's a fact. This is a goal. It's a measurement, and it's on the chart. So when you buy, you best go as low time frame as possible. So to making sure that you're not gonna hold the position, but you can get out as soon as you need it. And that's the most important information I can give you at this stage. In any kind of chart, which is in the situation that it's breaking hard, the 200 EMA, but it's still within the first structure of breaking, there is 100% sure there will be a correction, and it could be very deep. So be very careful. It's still very good. I mean, it's amazing. It's an amazing exercising opportunity. That was the reason why I was calling it. And it's still good, but just be aware of that information. Atom is very similar. It was perfect, just perfect exercising opportunity. Just remember for the analysis here, we got those beautiful movements and then the breakouts and new higher highs. That was very, very nice. But we are about to reach the zone right now. So you need to be very careful. Yes, we might breaking the 200 EMA, but the difference between ADA and AVAX is that Atom, not AVAX, is that in the Atom charts, if you have a look, the 50 EMA is so far away from the 200 that the price is supposed to be either going very, very high in order to get a golden cross. And guess what would happen then? It's a complete crash where you will experience, because it needed to increase too high to get the golden cross. And this will result in a big crash, a complete sell-off on Atom. ADA, on the other hand, is in a luckier situation because it's already, far away from the 200 EMA. It has a little bit less time to keep it up, and it needs a little bit less space to catch up with the golden cross. So what could happen is even a consolidation-like correction. And so it doesn't have to really strongly decline, but it's still the 50 EMA could keep in rise itself. But Atom is even more dangerous because if it fails to go very high in order to get the golden cross, that would mean another bear trend continuation on Atom. So that was a good opportunity until this point. And now I think we need to stop, and let me just change it to red so I can actually visualize for you that this is not a good opportunity anymore. Avox, it was like a dangerous situation, what I mentioned, because there are too much resistances around. So it's moving very well and it's looking very nice, but I still keeping my word, and it's very close to this. It could be somewhat, by the way, less dangerous now that we are above 89. But the target is just too close. If you like to do that game, then, and if you have a strategy for using such a very tight space on very low time frames, then probably you're the man for this potential movement to the upside. But again, let me just warn you that the volume is keep decreasing, and we are well below the average right now. So that's just kind of scary situation. Chiliz, I was talking about how good Chiliz could be until the 200 EMA. I guess out of question, and it was a good call to call you and hope you remember that I was particularly say that a little bit lower, the target a little bit lower than the 200 EMA is even better, because the resistance is the 0.08114, and we might get in a spike until that, but the candle bodies could close below the 200 EMA. That's just exactly what's happened. So I have no idea who's the market maker of Chiliz, but probably watching the live stream of the trade on the market. I really like that, actually. That was a very, very exact prediction. Coty, it was very nice. We already, exceeded the 0.04751, and that was a good opportunity until the 200 EMA. But because we are so close, either the Chiliz is not a very good opportunity anymore, and Coty might have a little bit more chance to the upside, but it's also most probably going to get a rejection from the 200 EMA. So I would not suffering with that. But it was a perfect call. Litecoin is still trying to manage to get a higher level, and we are about to fighting with 73, the level 73. That could be a dangerous movement. From that point, I'm not necessarily recommend this for exercising on the performance challenge, and the reason why, because 200 EMA is not a particular level. It's not a level, it's a moving average, and it's always moving. So it's getting closer to the level 73, while the price is getting closer to the 200 EMA. And I think this fact is starting to limiting the opportunities to the downside before a correction. Now, it doesn't mean it will never able to break the 200 EMA. What I meant with saying that is that most probably before we could break the 200 EMA, we would need another correction to the downside. And the picture is getting to be clear about that. Let me just show you an example of that. Near is not a very best choice at the moment. And the reason why, because if you see that breaking trial on the 200 EMA, that was pretty much successful. But that was level, was by the way, a very good measurement from us. There was a 1.559, which was trying to stop the price, tried to reject the price for 3 consecutive days, and then we had a breakthrough, and then we kind of negative again. It's such a, we want to make another retest on the level, and that's a danger. Why it's a danger? Because MACD looks very healthy. There's no problem. There's just a very little slowdown signal on MACD. Doesn't mean anything. Doesn't predict anything. That's a healthy MACD. Beautiful. But if we see the stock MTM is technically overextended since 25th of October, which is getting to be a long time now, and it's very close to cross each other, that could suggest a possible loss of momentum to the upside, which could be a possible break back on the 200 EMA, and that would be a very dangerous game. Now, if you take a look on the RSI, it's way overextended, which is absolutely fine. It started to be overextended on 25th of October. So since this bullish movement is overextended, but this is why doesn't matter what the RSI is doing above 70. What matters is just once the RSI is slipping below the 70, and that means a recalibration on the RSI. Now, RSI is recalibrating only when it's experiencing a complete change in the environment, which environment allows the RSI to stock above the 70 level. So if it switches underneath 70, it doesn't matter how much, it just simply switches underneath 70, that's almost 100% sure that there is a correction in game right now. So that's a very dangerous part of it. So just be very careful with near. But if you take a look on the ocean, let me just put that back. Very similar situation. You see that? Very similar. Overextended. You just need to slip once below the 70, and that means the stock MTM is already going to make a correction. Now, this is a little bit more developed than what we saw on near, because even the MACD started a little bit more serious slowdown. Now, this is only a momentum slowdown so far. So there's no reason to be very afraid that, oh my God, that was the high and that's it. As you can see, there was a beautiful breakout of this structure. That was a long time I did not talk about that, but I left the chart untouched, and you see the result. So if somebody was making a stupid game, could actually losing money because of margin calls or too much used margin at the same time, got no money left for other trades, so closed the position, which made the very early opening completely senseless. But if somebody was waiting until the breakout and the moment, that was a very clever guy, because then this guy was able to use its margin until the entire time for, you know, positive charts, maybe SPY or whatever. But now that was the time to start thinking about it, even though if they are just small, you know, scalp positions to the upside, it was still a very good opportunity to use it. But we need to be careful, because that's a golden cross. We're experiencing, that's true, but just very small signals of losing momentum. As long as the scale EMA does not break to the downside, there is no problem at all. We could expect another wave to the upside. But if those things are crossing and the price starts to break the scale EMA to the downside, then this is a correction and a possible retest for the golden cross. So don't buy the dip just yet at that point, even if you want, because you would be stupid. Because when the price is going to the downside, I understand that the crypto market is in bull trend right now. I understand that. But can you imagine while it's correcting and you start buying the dip because, oh my God, DCA, we will get a very, very negative news. Maybe a nuclear bomb just dropped somewhere, or not even that negative, but something negative. And instead of the price is bouncing back to the upside, it start like, you know, breaking down because everybody's very excited now. Oh my God, the crypto market is in bull trend, so I have to buy the dip all in. And people actually do that. And that's stupid because we have enough problem in the world. Why would you do that? Just wait until the price is bouncing back. Wait until the chart is healthy and go buy then. This is how you're going to make money. If you don't do this, you're going to lose your money because you extend your risk. And, that's just a complete senseless stupid. You will be right only by luck if you're doing that. And so that was just a couple of, that was just a few crypto charts, what I was follow up because I was explaining those in the previous live stream as well. So I just wanted to give you an update. And then let's see a couple of other sectors as well. Let me just change my share here. What you need, yeah? Yes. So there was a request. The request was detailing 3 different stocks. And those 3 stocks are Lucid, Rivian, and Tesla. Let's see Lucid first. Now, Lucid is a shit company with a very good looking car, but with very shit management. And I still believe that they are a scam. They was just too afraid to be a scam publicly. Therefore, they managed to make in a car. But this car is very expensive. Do you remember what was my analysis 2 years ago? Hope you remember. Because as I said that they will not be able to keep on the market themselves with the prices they actually do. Now, they wasn't really able to keep themselves on the market because we just entering the phase when people are getting really hurt about this inflation story, and they getting less and less savings, and so it's a weird situation when how would you sell a fucking expensive car from a shitty production, from shitty management, is completely unclear for me. So what I said all the time, even in last year and the year before, so even in 2021, when the first hype was done, I was said that that's not gonna make it. And then it made one more hype. And since that time, I am fighting with people on YouTube because I say, anytime someone is asking Lucid, I'm going out and then just say that, hi, I'm very sorry, there's no new things, because I know people are asking me about Lucid because they wants to buy and hold for long term. And from these points, I started to say that, look, I don't think this is going to be a good idea to buy and hold. No, I need to buy the dip, you are stupid, Thomas. Okay, let's be it. That was on these points. Like, that was the time. And then the second time when we got the new lower low, and then it started to come to the upside with these 2 candles. Somebody was asking me to make a video about Lucid. I think I included in one of my analyses, and I said that, look, I think this is already in negative territory. I'm almost death cross, and there could be a possibility that we are breaking out of this trend, but it's looking very negative. I don't think this is the best time to, buy the dip and hodl, because that's a meaningless company. This company is a joke. And then I got the answer again that, oh, you're stupid, Thomas. I need to buy the dip. You are stupid. This is going to go to the upside. Okay, let's do it. And I was waiting when that was the next time when somebody was telling me that now I am buying Lucid because Thomas is stupid. So since that time, we even get lower and lower and lower and lower. And so whatever the bottom will be, it doesn't matter. Yes, the stock price might be spiking up, but can you imagine the earliest, let's say, investors? There was no investor in Lucid, by the way. But let's say early investors or long-term keepers are already in major loss. They are in major loss. So holding this stock is the most senseless thing around the world. I just can't say any better analysis about that. In terms of trading, I see no sense to try buying it, because even if there are movings to the upside, they are so quick, that's it. That's just a little jump and just coming back. And it's keep coming lower and lower and lower. I understand we are very close to zero. I understand that after zero, there will be no level to go down. I know this, but this company will get hyped only when they're talking about, but it has nothing to do with the performance of the company, because the company does not have a performance. It's not only losing the money quarter by quarter since it started its operation, it's losing everything. It doesn't have an operation. This is, I'm sorry to say that, but this is a bullshit company. So if you're asking me, I don't want to make an analysis when I say that, yes, there is a higher high and now it could go to the upside, because no one gives a shit about Lucid. No one wants to buy and hold the money in because the company is not worth it. So the best analysis I can give you about Lucid is get away from it. Even if it's going to the upside, get away from it, because you're going to stock in and then you're going to lose your money. That's as people did when I told them, get away from it. No, I have to go in. Okay, let's do it. I don't give a fuck what you're doing. But, you asked me, I answered. You don't give a shit, and then you lost your money. And what to do? What can I say? That's not my problem from that point. So yeah, that's nothing. The second one was Rivian. Now, Rivian is a different story because Rivian has actually a production. Rivian has a plan to produce cars, but Rivian choose a very bad time to start the company or go with the IPO and start making productions, because Rivian is fairly expensive and it is a good one. They are able to produce cars, unlike Lucid. The Lucid factory is not able to produce Lucid cars, but Rivian is able. And Rivian is a way larger scale used car. It's a pickup. And so they try to increase the sales, but it's unsuccessful because we are just entering the phase when less and less people will be able to buy new Rivian cars. Now, there will be government supports for that. I am 100% sure. So therefore, we will get maybe next year we will get some of the corporate earnings from Rivian. It will be positive. It will show a high number of sales. But when you see that, you need to have a look on the actual balance sheet and on the description of the last quarter, whether the company received government support or not, because that government supports mean that maybe people are able to buy Rivian with 30% discount, and the 30% will be paid by the government. But the government will not pay this 30%. The government will allow the company paying less tax, and then they don't have to pay the money out. But those stocks are limited, so not every single kind of tax can be used for reduce this credit, actually. And therefore, it's going to be a slow process to get this for the company. So what the balance sheet will say, they sold shitload of cars. The price will be there on the revenue because that's supposed to be deducted from the tax. But it cannot be deducted until the corporate earnings coming out. So that's what's going to happen with Rivian. That's the situation of Rivian. And the problem with that therefore, Wall Street can identify this situation as good, and they could start buying Rivian, not now because it's not going to happen, maybe next year or maybe the year after. And maybe some of the investors jumping in as well. But this will create a long-term large waves on the chart, because the revenue at the same time will a little bit lie as well. And therefore, there always will be some kind of, times like in maybe a 3 to 4 months period when there will be a sell-off on Rivian. Now, that's the one. But now I was talking about maybe 2025, 2026. In 2024 and 2025, the company will probably die a little bit. I mean, it's not going to die. It's not going to go bankrupt. Hopefully, it's not going to go bankrupt. But in terms of stock market, no way. And the reason why, because the stock market is particularly sensitive for corporate earnings right now, and particularly sensitive for consumer financials. And the consumer financial is dropping like hell in the United States. Now, since Rivian is only selling cars in the United States, they will be able to sell only less and less and less cars in 2024, which will result in less and less and less revenue without any government support, because the government is focusing on giving people, benefits, because they're going to lose their jobs. So it's going to be a bad word for the stock market, and it's going to be very bad for the Rivian. So that's for 2024. Now, what could happen in next week? Well, that's a little bit easier question and a little bit easier to answer. We are in death cross environment. The stock price is failed to make a new golden cross, which means fell back underneath the level 20.40 and the 50 EMA. We are in a correction to the upside, but yes, you heard it good. When it's going to the upside, it is a correction. In fact, it looks like it's about to get a rejection from the scale EMA. Even if it doesn't have a rejection, at the moment, we should not expect any higher possible level that we can reach as a 20.30. So this horizontal line, the blue one. Why is that? Why do I say that? Does it mean it's not able to go anymore to the upside, or that's it, finish? No, it doesn't. But it depends on what time frame you're thinking. Do you ask me about the Rivian because you're thinking on low time frames? So what it's going to do in the next 24 to 48 hours? Or do you think, or do you just simply ask, do you think Rivian can go back up to $30 ever in life? Do you think Rivian can be $50 in its life? Of course, it can. Will it? I don't know. Because if the company does not go bankrupt in the next 3 years, it's also possible. Then this case, maybe in 2025, 2026, I see this stock price possible go up to 50 again. But if the company go bankrupt, because the next year it's gonna get challenges for the company, it's getting so hard that they will give up because nobody saved them, then what are you going to do if you're just listening to my words that I say, yes, it could be 50, and you just go and buy because Thomas said it's 50? No, Thomas didn't say it's 50. Thomas said it can be 50 if the company does not go bankrupt. But it's also a possibility, because that's going to be a very challenging time for this company. 2024, definitely. And as I said, the market, the Wall Street, is judging the market about the corporate earnings right now. How is the earnings expectation with Rivian? Now, there is an expectation to losing the earnings with minus 1.34. And the estimated revenue is 1.32. Now, let me just quickly see how is the total revenue. And then on the balance sheet, let me just see the... Just 1 second. Maybe I'm better to see this on the cash flow, not the balance sheet. And I'm looking for just one more data. So, you see that? So even though the revenue was increasing, free cash flow was declining. The actual income, by the way, it was declining as well. And that's the situation what the Rivian is. So they selling the cars, but they got the revenue, they put on a balance sheet, but they haven't got the support from the government just yet, because it's supposed to be tax cut, which the company is not able to use at the moment. You see, this is to say to the market, this, because everybody knows this data, revenue, or whoever watching the market heard about the revenue. And if they're reporting this, they're reporting that, yeah, we're going to the upside, go and buy the dip. That's the narratives, what the company is doing. But in reality, yeah, so you know what I mean. So when I say you need to be careful with that, yes, there are possibilities to go to the upside. I would not count over 2.30 at the moment. And then if the stock price is able to break 230, then maybe we can try 21.89. From 21.89, the situation is a little bit easier, because these steps, it's way harder to do than these steps. Do you know why? Because at this point we will be above the 200 EMA. So yes, it's way easier to come all the way up to this zone, but then it's going to crash again. And I have 100 million reasons to say why it would crash again, but it would. So yeah, that's Rivian. If you're asking me, I'm not looking for any kind of buying opportunity at all, but neither shorting opportunities, because the price is so low already that I do not think that the company will be undervalued even further. So probably it's going to slow down in moving. Have you remember for the crypto charts, right? Crypto charts is doing that explosion and then crash back, which nobody believes is going to happen, and then bounce back. Oh my god, buy the dip. Oh no, sorry. Oh my god, buy the dip. Oh no, sorry. Buy the dip. No, sorry. Buy the dip, and then an AKG. And then at one day, when the industry starts waking up, yes, this is what we're going to experience again if the company survives. So I think this is the sleeping phase which the company is going in. I don't think it's going to be any more undervalued, like drastically, at least, but it's probably going to be a sleeping phase. Tesla is a completely different story, because Tesla is not relying on only car sales. Tesla is getting to be an energy company as well, which is a big word. But the stock market is stock market, and if it doesn't pay good, and if the Tesla management is not fast enough to get into the energy sector even stronger, we'll not be able to keep the price. And that's the thing. So it's just a very easy technical picture. So you see this, we're going to the downside, you see this big flag. What is it? A bearish flag, right? Okay. You see this blue line, we broke it, and the price is going to the upside. Guess what it's going to be? Or I should say, what it will be or wants to be. Well, in first case, it wants to be a retest, even if it can get into here. And then after the retest, that's a very, very possible scenario. I'm not saying it coming down all the way down here. It may be going to come down here to 0. It may be come down only until here. I don't know. I not investigated that. I have the levels. You can see on the chart, on the live chart as well. So that's not a surprise. You can calculate with the possibilities to the downside according to those levels. That's what I do as well. To the upside, I cannot tell you any new thing what I told you in the last, well, maybe this year. And is that as long as we don't break this yellow line to the upside, I don't see why someone would buy and hold the stock. It doesn't make sense. Now, for traders, for short-time traders, you're supposed to be very experienced to scalping on stock markets. Now, if you are, because I don't know whether you are or not, and because I don't have the information, I have no right to judge you, and I don't even want to. So I would like to give you good advice for both of the scenarios. So if you are very experienced and you're not supposed to think in buying this thing because it doesn't make sense. Because there is one thing, truly there is no DAF cross just yet. And if there is no DAF cross, we always could break back the 50 EMA, which is this line. This is the 50 EMA. If we do, you're actually positive for scalping to the upside, but you need to make sure that you're 100% aware of the limitations by the levels and trend lines, okay? That's where you need to stop scalping. But since you are, let's suppose that you're an experienced trader, you probably already know this. Second thing, we just had a negative cycle and we just opened by daily exact time the new cycle. The new cycle opened, and I told you about this scenario. If the new cycle is opening below this zone, now that's a dangerous scenario, because then the cycle opening momentum, what you experienced in every beginning of a cycle, look at that, cycle opening, whoop, momentum, cycle opening, whoop, momentum, cycle opening, whoop, momentum. And it's always stopped by some major resistance or trend lines. You see, momentum stopped by trend lines. Momentum stopped by this level. Momentum stopped by this level. Momentum, oh fuck. Yes, that's a problem. And even the scale EMAs are in negative. So the thing is that now a very strange possibility is happening on Tesla. The price could very easily stuck within the zone, because it's very hard to leave the zone to the upside. But at the same time, traders are afraid to shorting too much on Tesla, because they know exactly that the big fish is here and it's watching this line. And once we're breaking down there and make it a new lower low, a new short party starts, because that cycle in this case will be very negative. That's the analysis of Tesla. Now, that's if you are an experienced trader, you're probably watching the price going to the downside and not to the upside. Not because it's not possible to go to the upside, but because if it's going to the upside, it's fucking dangerous. But when it's going to the downside, it's a little bit risk-freer. So on which direction you want to trade? Because this is the question will decide about where you want to trade. And if every single trader wants to trade to the more reliable direction, not the more riskier direction. So the answer is down. So you're supposed to only looking for short positions only after we are leaving 207.91. Now, if you are not an experienced trader, I don't think that this is the best thing to start trading on Tesla. I think I would suggest to start with some Forex or crypto, maybe and ETFs. That would be a wiser decision, but not Tesla, and especially not the stock market, because this requires a lot. I mean, seriously, a lot of experience. Okay, so you got both of the insights, so you can decide whether what you want to do with this. And if we are on the EV sector, let me just give you two other charts as well, which might be worth watching. Wondering what? Yeah, both of them Chinese, not American. And one of them is Xpeng. You remember that? This is whatever structure you want to be, this is bullish. And then golden cross retest. If we manage to go above this, I would not trade at all until this point. If we start to make this zone, maybe I would try, but this is a very risky try. But very nice cycle opening. And the big question is whether this cycle is going to be negative or positive. Because if it's positive, then in the next cycle, we might be able to break, let me just clone this line. We might be able to break 19.98, which is, let me show you, that level, this one. If we can do that, perfect. Perfect exercising opportunity to the upside, and probably will be very strong. It's not, I'm not saying it's going to make a higher high, okay? We are very far away from the far higher high. But I could make opportunities from 19.98 to 22.63. And now we need, at that point, we need to stop and just have a look if we can break or not. Because for there's a previous, the last time it did not happen. We got there and then couldn't manage to break it. But the golden cross was there, the retest is there. But if we get this level, the retest is successful. And that's a really good thing. So that's something. XPeng is something worth to watch. Another one is a Lee, sorry, not a Leo, not the Neo. I just left here this drawing because you remember when I was explaining last time, I was analyzing Neo to you. Now, I'm not going to go through the fundamentals of the company because we just don't have the time to do that now. But what we do have time for is the quick analysis of the technical chart. I explained to you that here is a kind of bullish structure. If it's breaking to the upside, breaking the 50 EMA again, and manages to go above 36.73, then I just left here just fairly accidentally an arrow to the upside. I did not want it to, suggest anything. Just, I was drawing and accidentally left there on the chart. But anyhow, I see this structure is indeed about to break. I am not 100% sure that this line is supposed to be here or not. Let me just help myself with a little bit of RSI. And let me just calculate off this overextended peak here. And just measuring the RSI from that level. It's already broken. It's already retested. And it started to go to the upside. Now, we're waiting for the cycle close, but where is it may be it was too early. I'm a little bit afraid to say, but it doesn't matter from where perspective I see. I'm watching it after 36.73. That looking like an almost a perfect exercising opportunity, which I warned you, and that's important to warn you in time because as you can see. Before the market opening, the pre-market price, yes, you can believe your eyes, it's at 39.16. That's insane. That's insane. That's a ridiculous gap to the upside. Something is very strong in China, and I am not surprised because I told you week by week, China is sending fuck you signals to the United States, and I do not believe to the narratives of the Western media, because it's bullshit. China is good, is doing good. And yes, they are actually doing good. So yeah, there you go. What I warned you for is actually happening. Now just a quick have a look on, because I promised you. You remember what was I talking about, the 10-year yield, 2-year yield? So that was the target of the 2-year yield, the original 4.70. And then I extended 2 more target possible scenarios. One of them stopped the 10-year yield. So that's a signal. I think it's going to rise from that point, and probably therefore DXY is going to rise as well. Just so you know, okay? There's a high probability for rising. Why? That's because this is the 50 EMA and we need to retest the scale EMAs. And if the 10-year yield is really finished at this level, it's supposed to show us with the head and shoulders. So we need a right shoulder. But if we're invalidating the head and shoulders and breaking this level, we're going to get to the next target. Now, this is very bad for the stock market, okay? This is very good for the stock market. But until a point that this thing starts to fly, because even if this starts to go to the downside, the stock market may be reacting very positively at first, but then if this thing starts to turn to the upside and it looked like every large investor started to investing in bonds, then Apple gonna go down the toilet, Meta is going to go down the toilet, Netflix, maybe not, but Microsoft, yeah, more definitely gonna go down the toilet, Nvidia, go down the toilet, Google maybe somehow keeping in place itself. You know what I mean? So here's the thing. I cannot tell you what is going to happen, but I have scenarios. And if this thing wants to go down, it needs to come up first. Complete a right shoulder. And then can start decline, but we will see whether this neckline is going to hold or not. But if it doesn't happen, and we got a rejection, and we hit 4.99 again, and we break in, the next level is 1. I mean, the first is that 5.30, that's the next level, and 2, interest rate hikes. Okay? And then TLT probably going to stay low. But if this thing starts to go to the downside, there will be a little time shift. So in this time shift, the stock market will jump to the upside, maybe like crazy, like we're going to see a second monkey rally. It could happen very easily, but then this little thing going to jump to the upside, and this will be the end of the stock market. Okay, these are the scenarios. DXY will be fine. I'm not worried about DXY. The US 30, the US 10-year yield. No, the 2-year yield. Sorry, that was exactly the same. We almost hit the target. Just a very little one. And I don't think that the 2-year yield is finished just yet, because we saw this very extreme crashing. You see that? Everybody thought, okay, this is the end. There is no more highs of the 2-year yield, because you can see head and shoulders, and you can see that struggling to the upside, just barely a new higher high, and then a big crash, and then it started to consolidate, and everybody said that, look, this is going to crash like shit. And then what it did, a new higher high. So just be careful with the 2-year yield. This is a very tricky guy. And yes, it's obviously going to the downside. Most probably trying to reach the 200 EMA. But at this point, I don't think it will have the time, because once the 10-year yield starts to rise, the 2-year yield has just a very little time to correct and need to follow the 10-year yields as well. So this is why I told you that we need to be very cautious on the stock market, because almost all the investors community is watching this one. iShares 20+ year Treasury bond ETF. That's the one, and the individual bonds as well. So they're watching it now. They're getting out the stocks. The stock is going up only because of retail traders. There's no volume. I mean, look at the volume. You see this Meta volume. I don't even see the candle. This is not a volume. This is a retail trader. Look at that. Since there was a capitulation here, there was a capitulation, and the big increase went up with a very small volume, with continuously decreasing in average. This is a dead stock. It's just driven by retail traders. Investors are getting out, and it will be big time falling like crazy. Let me show you a big one. What the volume is doing is actually, look at that, is declined since it's consolidating. That was the time when I was posting to you about it, that the Nvidia CEO has started to sell the stocks. Whoops! Everybody stopped buying Nvidia. I mean, I understand. Oh my God, it went up like $20. It's nothing, guys. It's driven by retails, and the Wall Street is waiting to push the red button. Just waiting for this. Nothing else. So don't get too excited. There is no volume in buying. Not at all. Big Fish is not buying the stock market anymore. Big Fish want to buy this one. This one and the other one wants to buy. And I told you that I'm going to show you. Yeah, there's no major correction on gold. And it could be. And I told you that we are waiting for corrections. But and that's very interesting, while the stock market is going to the upside for 5 days, nobody was selling gold. Which means the Big Fish is holding the gold against the stock market. It's betting that the stock market is going to go to the downside. So be very, very careful with that. Okay? So from my side, I'm not interested in stock market because it doesn't make sense. I'm interested in safe havens, and that, I think, this is the good solution and the good choice. Now, this is 2 hours already, so I'm not going to wasting your time. And I also want to make other jobs for you as well. And so my team is also working very hard and probably will work even harder. So I'm going now. I hope this live stream was very useful for you. If you want to see more charts, if you want to see more analysis on technical charts, you're going to leave me your comment on the live chat room, and I'm going to include in the next live stream. And so if something takes a little bit longer, then you will find in the analysis room with pictures and everything. So don't worry, I'm not going to delay that anymore. So I wish you a very successful week. Be very careful. Please handle these informations very wisely. And then I'll see you on the Discord server and waiting for your questions. Until then, goodbye.